My next guest published a note today, and it's titled, Widows and Orphans Take the Lead. Wall Street says it's different this time. Famous last words? All right, let's bring in Belpointe Chief Strategist David Nelson. My man, that sounds very ominous.
We came in today. It's a pretty ugly tape. Look, I guess investors are trying to assess right now. I think half the street right now is trying to assess: are we in recession? Are we headed for a recession? Or is somehow the Fed going to magically stick the landing? They've only pulled that off once in the last half century, so the odds aren't very good on that. Right. I look at the tape, and utilities do not lead bull markets.
Even utilities and an electricity crisis.
Look,
they get a little asterisk this time around.
AT&T is just hitting a 52-week high. That tells you what's going on here. The leadership is obviously, struggling right now. At a minimum, we're looking at a growth recession. But every time the Fed has, embarked on a cutting cycle, a recession followed, usually because they're just too late. And I think what the market is starting to understand is that we're just pumping so much money on the fiscal side. That's what's been propping up the market.
So to your point, we talk about the Fed 25 or 50 and whether or not 50 would spook the street, although it looks like someone spooked today. But what if the real argument is, what if they're already kind of late already?
They are late. But they'll be incremental. That's what they do. It's the nature of the beast. They don't want to make a mistake on the other side.
But what's a greater risk then right now? Because their whole time Powell wanted to get this soft landing, right? He wanted to achieve this thing really, even more so, at least the way I read the body language between the lines, what I've read about him, what I see him at the FOMC, after messing up the transitory thing, right? In other words, they blew that. Right. He admits that. Do you blow it on the other side and blow the soft landing?
Historically, that's what will happen. That's as a matter of fact, in the last 50 years, every time they started on the cutting cycle, the recession followed because they were really too late. So maybe this time will be different, but we have a lot of structural, things that we're trying to deal with right now. For me, the biggest thing that's happening in the market right now is we've lost the consumer. Right. Look at the earnings season that just passed. The big winners, Walmart. Right. Costco, right. TJX, they all have one thing in common. They cater to consumers looking for bargains. Right. We saw it in bookings, Airbnb, the consumers retrenching. Right. That's one leg of the stool that's gone.
We even saw it in things like Williams-Sonoma, But I also have another table I'm going to share with the audience to pick up on that, because the other end of that was Walmart stock is up 46% this year. Dollar Tree is down 31%. Dollar General down 39%. Five Below down 63%. Big Lots is down 94%. Just delayed the earnings announcement. Probably going to file for bankruptcy. And their core shoppers they have nowhere to go. Everyone else can trade down to Walmart. They can't trade down anywhere. They're done. They're tapped out. But Wall Street always says, well, look at Walmart. The consumer is strong.
No, they can't say that. That just does it just doesn't hold water. And I'm kind of surprised by the street. I heard the word normalization. If this is normal, I don't want it. I want something abnormal, because this is not a healthy market right now. We have to admit that. Right. To say that I can't predict that we're going to hit a recession, but this is not healthy, and we are experiencing a slowdown.
Can we say this, though? If the stock market is coming down at the pace that it's coming down right now, the jobs market is coming down at the pace that it's coming down right now, that we will see that a recession become more of a self-fulfilling event, where people just simply say, hey, I don't know what's going on, but I'm afraid, and they just sit on what they have.
It's likely true. When the markets have a big psychological imprint on consumers, if they start to reach
the so-called wealth effect starts
to disintegrate, and I think the Fed will move too slowly. With real rates where they are, they're very restrictive. They should really come out of the gates blasting right now. There should be at least 50 basis points, maybe even 75. That would be the right thing to do.
You know what? I love that you're saying that. A lot of brilliant people are telling me they're afraid to spook in the market, but I always thought their main objective was Main Street anyway.
Look at the tape. Market's spooked. Okay, I think that train has left the station.
Yeah, we won't even do the stock picks this time around. Okay. We don't need to do any stocks. I'd like this conversation
because
is
great. Thank you.
This is what we have to be focused on, right? Yeah. This is what's moving markets right now, and it's all about the Fed not making a mistake. Maybe they already have.
Maybe they have. Yeah.
David, thank you very much, my friend. All right, folks, you remember about a month ago we talked about the raw dogging trend? David, it's not what you think it is. Anyway, wait until you hear about raw dogging 2.0. Oh, my God, this is the Gen Z's latest obsession.